Hey everyone, after the blockbuster listing of Premier Energies, there's another high-profile IPO coming up soon. It's the IPO of NTPC Green Energy, which is a subsidiary of NTPC Limited. And NTPC, we all know, it's one of India's largest power producer and a PSU company that enjoys Maharatna status. Although the exact date of the IPO is not yet finalized, but it is expected to be in the first or second week of November month. And this IPO would be at 10,000 crore rupees, which would be a complete fresh issue. So in this video, I have done a fundamental analysis of NTPC Green Energy, where I've explained its business model, key strength, growth drivers, financials and key risk. Currently, we don't have the valuation detail, but I'll cover once the IPO date and IPO price band would be finalized. For now, this video is to get the basic idea whether it's worth investing in the IPO for the long term or not. And towards the end, I've shared a hack to increase the chance of IPO allotment in special cases like NTPC Green. But before we begin, this video is only for educational purpose. Now I'm a SEBI registered research analyst, so technically I can give buy-sell calls, but my goal would be to share knowledge and empower you to make right investment decision rather than giving stock tips. Alright, let's get started. So NTPC Green is one of India's largest renewable power producer that mainly includes solar power and small portion of wind power. Here first you need to understand the value chain of solar power to understand where does NTPC Green fits into the overall value chain. So if you are following this channel, I recently did a detailed video on Premier Energies IPO and explained the entire value chain of solar sector and which companies fall into which segment. If you really want to understand the solar value chain, do watch that video. Basically, the solar value chain starts with your raw material supplier, mainly from China. Then you have solar cell manufacturer, which is the most complex part of value chain. There are a few Indian companies that have expertise in solar cell manufacturing, like your Premier Energies is one of them. Then Mudra Solar, which is part of Adani Group, has leadership in solar cell manufacturing. Then Tata Power has small segment of solar cell. Then there's a small cap listed company called Websol Energy that is dedicatedly working on solar cell technology. Then third stage is solar module assembly, where company assemble the solar module. It includes companies like Waaree Energies, that is the largest player in solar module assembly. Then other players include your Renew Power, Tata Power, Premier Energy, Vikram Solar and so on. Then comes your EPC company that provide engineering, procurement and construction work. In short, they set up the solar park. There are many companies in this segment including your SW Solar, Waaree Renewable, Oriana Power and so on. Then final part of value chain is solar power producers that include companies like NTPC Green, Tata Power, Adani Green and so on. So NTPC Green produces solar power and then feed that power into the grid. I hope you got a fair idea of where does NTPC Green fits into the value chain of solar power. Please note that it only focuses on power production and it outsources the EPC work of setting up the solar power plant to other companies. Now this slide gives a clear idea about company's operating capacity. As of 30th June, company has a solar operating capacity of 2,825 megawatt or 2.8 gigawatt. It was 2.5 gigawatt on March 23 and 1.3 gigawatt on March 22. So from 22 to 23, there's an excellent growth mainly after COVID recovery. But from 23 to 24, growth has relatively slowed down. Still, it is good. In addition, there's a small wind energy capacity as well. Company has a breakup of contracts awarded that include 9.7 gigawatt of solar capacity and 2 gigawatt of wind capacity. That's a total of 11.7 gigawatt. So company is sitting on 4 times contracts as compared to its current operating capacity. That gives a good future visibility. In addition, there's a breakup of capacity under pipeline that includes 7.7 gigawatt of solar capacity and 3.2 gigawatt of wind. So that's a total of 25 gigawatt of capacity under operation, contracts being awarded and capacity under pipeline. Just to give you the revenue breakup, as of FY24, 93.7% revenue of the company is from solar power, 2.4% is wind and remaining from other sources. Now you might ask, what is the moat of NTPC Green that gives them sustainable growth in the future? So first of all, being a part of NTPC Group, company enjoys AAA credit rating. It gives them the benefit to raise money at the lowest possible interest rate. Since solar power generation is an extremely capital intensive business, you need a lot of capital and that also set a strong entry barrier for other players. That's the reason you'll find only top groups like Tata's, Adani as the leader in that space. So if small players want to raise money for solar power generation, they would end up with higher interest rate and that would directly impact their profitability. Plus, you need to set up huge solar plant to ensure economy of scale that requires huge investment. That's where NTPC Green has a very strong moat. In fact, it is also reflected in company's financials where it operates with nearly 90% EBITDA margin. In FY24, out of 1,962 crore of revenue, company has made an operating profit of 1,746 crore and 488 crore of profit before tax. The growth has been excellent between 22 to 23, but that was also due to economy opening up after lockdown. Between 23 to 24, the growth has reduced, but still it's very good. Then company has net debt to equity of 2.3 as of June 24. That's because this business is highly capital intensive. Now, an EBITDA of 90% might look like extraordinary, but here you need to ask what is the investment required to generate that kind of revenue and profits. So, NTPC Green reported an EBITDA of 1,740 crore in FY24 on a gross block of 19,900 crore, implying a cash return on gross capital invested at 9.6%. Gross block here is your fixed asset. As compared to that, Tata Power and Renew Power has a cash return on gross capital invested at 10.8% each, and Adani Green has a cash return on gross capital invested at 14.7% in FY24. Please note that this analysis does not consider the stabilization of assets and part capitalization of under construction assets. Still, it gives a fair idea. Now let us look at the future growth prospect. Okay, before we proceed further, if you find my analysis useful, you can also explore my weekly video series that include one exclusive video every week where I discuss my own portfolio strategy, stocks where I'm investing my own money, along with identifying next big investment opportunity. Then you also get access to exclusive investor community, as well as there's a 200 plus stock list of companies where I track the quarterly results. So this is the Excel that you can access that include the tracking of quarter results along with comments. Apart from this, you also get access to high growth companies along with the revenue expectation, top line, bottom line, as well as mid and small cap opportunity, then stocks by various themes like consumption, IT, so on and so forth. But please note that this series is only for long-term investors and not for traders. To begin with, in spite of improvement in electricity availability in India over the last few years, we are still one of the lowest per capita energy consumption country. India's per capita energy consumption is 1.3 megawatt as of calendar year 2022, whereas Brazil has 2.5 megawatt consumption, China has 5.3 megawatt consumption, and US has 12.7 megawatt. Now, power demand is closely associated with the country's GDP. As India is the fastest growing economy in the world, hence there is going to be a massive requirement for power. What are the growth drivers? Well, a lot of them. One is your government initiative like 24/7 power for all, then Sahaj Bijli Har Ghar Yojana, then railway electrification, then increasing EV penetration, rural electrification, then rapid urbanization, then increased penetration of consumer durable, and so on. Overall, between FY23 to 29, India per capita energy consumption is expected to grow at 5 to 7% CAGR to reach 1.6 megawatt. Now, within power, the future is renewable power. Simply because the entire world is focusing on sustainable growth. We have already seen the side effect of modernization with climate change. That is the reason every country in the world is moving towards renewable power. In 2021, United Nations conducted a climate change conference which was a landmark event and witnessed very important decision to reduce global warming by 1.5 degrees Celsius in this century. And for that, it required to phase out coal power and inefficient fossil fuel to reduce carbon emission. That's where India has submitted its goal to reduce carbon emission by 45% by 2030 as compared to 2005 levels. And for that, government planned to achieve 50% of electricity production from non-fossil fuel by 2030. Now, it's very important to understand the current state of power installation and production. So this slide gives the breakup of power installation where conventional power, that is coal, contribute 57% and renewable is 43%. Within that, solar contributes 19%, wind contribute 10%. Please note that installed capacity does not reflect the actual power production capacity because renewable energy has lower capacity utilization as they have dependence on sun and wind. So this slide shows the power production capacity where conventional power contribute 79% in total power production as of today. Renewables are just 21%. So as compared to the installation capacity, renewable power contribution in power production is on lower side and government target is to increase it to 50% by 2030. Within that, solar is just 7% and wind is 5%. So there's a long way to go for India to achieve its renewable power targets. And that's where companies like NTPC Green are looking quite promising. Apart from renewable power production, NTPC Green is also investing in hydrogen, green chemical and battery storage capacity and associated technologies. Their current initiatives include the development of green hydrogen hub in Andhra Pradesh and finalizing a tie-up for electrolyzer. In the area of battery storage, company intend to install the grid-scale battery storage to complement the solar and wind power. In addition, they also intend to participate in standalone grid-scale battery energy storage system service in the tenders in the market for various DISCOM or grid balancing. Further, they are in process to install battery energy storage at NTPC thermal plant to smoothen the flexibilization on pilot basis. Now let us look at the key risk in growth thesis. So first big risk is concentration risk. NTPC Green has a concentrated pool of power purchasers for electricity generated by them. These are all central and state government utility companies. In FY24, 98% around revenue of the company is from top 9 off-taker, where single largest off-taker, which is Telangana Discom, has contributed nearly 50% in company's FY24 revenue. So if there's any financial issue with these off-takers and if they fail to make the payment or let's say delay the payment, it would badly impact NTPC Green revenue and profits. Second risk is profitability dependent upon availability and cost of solar components. Since NTPC Green procures solar modules, solar cell, wind turbine generators and other components from third party for power generation, any disruption in the supply or increase in prices of these components can have a negative impact on company's profitability. Moreover, there are also some levels of dependence on China for import of components like solar cell. As of FY24, around 82% components are from India and 18% around from China. So any restriction on import from China or sanction or high tariff on import can negatively impact companies' business performance. Then third risk is operational risk. Solar power production is a high investment business. There could be a cost overrun or delay in project completion that can impact companies' business. Moreover, NTPC Green rely on third-party EPC company to construct and install the solar and wind project. If there is delay from EPC company due to shortage of labor, or if there is a labor strike, or if there is an inability of budget from EPC company, it can directly impact NTPC Green business. Although there is a provision to impose liquidity damages for delays, there can be case where NTPC Green may not be able to recover all the losses. Then fourth risk is competition risk. Although there is a huge scope for growth for renewable energy sector, you can't ignore competition risk. Today, there are a few companies in renewable sector that could have better operational efficiency, better technology and better economy of scale as compared to NTPC Green that can result in competition to bid at more competitive rate. To match the competition or win the bid, NTPC may end up with lower profitability. Further, NTPC Green also competes with traditional energy companies using fossil fuel to produce power. So if the cost of coal, oil, natural gas reduces, these traditional energy companies can reduce demand for renewable energy and adversely impact the business. Now finally, let us look at how to increase IPO allotment chances for NTPC Green. These days, the biggest regret of an investor is non-allotment of IPOs. Personally, I am extremely unlucky with IPOs. How is your luck in the IPO? Let me know in the comments. But recently, I have identified a hack to increase the probability of IPO allotment in special cases. So if a company has a listed parent, then the IPO offers a separate quota for existing shareholder of the parent company. For instance, recently listed Bajaj Housing IPO had quota for existing shareholders of Bajaj Finance. Likewise, NTPC Green would have a quota for existing shareholder of NTPC Limited. To qualify as shareholder, you just need to have one share of NTPC. But that has to be purchased before the cutoff date. Since we don't have the exact date of NTPC Green IPO, we don't have the cutoff date to qualify as NTPC shareholder. But you can always buy one share of NTPC Limited and become eligible for two applications, one under retail or HNI and one under shareholder quota. Again, it does not guarantee the allotment, but doubles your probability of allotment. So in this video, we discussed the fundamentals of NTPC Green. If I quickly summarize, it is one of the largest renewable power producer in the country with around 94% revenue coming from solar power. Being a part of NTPC Limited, which is a Maharatna PSU, NTPC Green enjoys AAA credit rating that helps the company in raising fund at one of the lowest possible rates. That results in lower cost and help in improving profitability. Clearly, there's a strong tailwind in renewable power sector due to all the key growth drivers that we have discussed. NTPC Green is also investing in hydrogen, green chemical and battery storage capacity and associated technology. So opportunity size is massive. Then this sector has a high entry barrier due to very high cost of investment and operation. NTPC Green also has a strong financial profile with good growth in the past. Although NTPC cash return on gross capital invested is lower as compared to competitors. Also, there are certain risks involved in the business that we have discussed in detail. You need to keep those risks in mind before investing. Now the final part, which is whether it is worth applying for the IPO or not, would be decided based on the IPO price band and valuation analysis. I'll do another quick video when the IPO window is open or about to open so that you can make an informed investment decision. For now, if you want to increase chances of IPO allotment in NTPC Green, you can also consider buying at least one share of its parent company. Let me not stress this video further. What do you think about NTPC Green? Let me know in the comments. I'll see you next video. Till then, take care.